Yeah, good morning, Shrishti. See, first of all, I think the stock has seen a decent upside from around 165 odd levels to current levels of around 220, 225. So I think, now one part of the rally is over, and looking at the structure of the stock and the business model, I think it's a very stable business which REC runs. They are largely in the power distribution financing arm, and most importantly, the kind of tailwinds we are getting in the power sector. A lot of capex is being put up, so I would believe that if the investor has a 6 to 12 months view, then I think he could expect a medium-term target price of around 270, 275. It's a slow mover, largely a dividend yield stock. So I would believe the investor should keep a slightly longer-term time frame, considering the present volatility in the market. But yes, it's a good stock to accumulate, provided the time frame is slightly longer, and I think he can remain invested till about 265, 275, which looks very fairly achievable in the near term. Cheryl, this is a unique company which is into bar coding, and I think largely caters to the FMCG kind of market. In fact, they've been doing very well, and in terms of profitability margins, in terms of the volume growth, I think last year was a very good year. The first quarter numbers has also been quite good. I've been hearing that some sort of buyback has also been announced, and I think the investor should take a long-term view here. The market will obviously grow in line with the growth in the FMCG market. Of course, they've been tapping other key sectors also. They also make other consumer kind of items like the printer inks. Supply printers as well as printer inks to their clients. So I think this is also a growing segment, and I think very little competition from the domestic market. So I think all said and done, a long-term view can definitely be kept here, provided the investor can hold on for the next 12, 18 months. So good long-term prospects. So continue to hold if the investor already has it. My sense is, I think GNFC as well as Redington. These are two companies which we believe can have the ability to bounce back. GNFC is down because there has been a dip in TDI prices by almost 15 odd percent. But I believe it's the only player in India has a very large consumer base, and hopefully over the next 6 to 12 months, a recovery could be coming. As far as Redington is concerned, this quarter was little unimpressive, a little disappointing on the EBITDA margins. But I think the kind of geographical network they have, and obviously a debt-free balance sheet, plus a very strong kind of positioning, with a lot of electronic products and consumer durable products. So I think definitely a bounce back would come in. So here in these two companies, you can accumulate since the buying price is much above the existing current market price. But for the other two companies, I think it's avoidable. I would believe these two companies can be exited. Yeah, I think 3i Infotech was earlier Shrishti, a ICICI group company. They got demerged and got listed separately. And I think the numbers for the first quarter are not very encouraging. The company has posted a loss. So I would believe that I think if the investor even has a long-term kind of time duration, it would take a long time for him to recover his cost price. So I would believe that another bet could possibly be a federal bank or a IDFC First Bank. I think it's better that he switches his capital to these counters where I think the risk reward over the next 12 to 15 months is better. For 3i Infotech, we don't think that the traction is going to be very strong in FY24, and therefore I think it's unlikely to outperform the market. So I think a switch would be better. So he could look at Federal Bank or IDFC First Bank, where I think his capital could generate a better alpha over the next 12 to 15 months. Yeah, I think Genus Power, the stock has risen quite significantly. Genus Power is into smart meters, and recently, they got a very large order of almost 1,500 crores. The product is definitely very innovative, and now most of the power electricity boards are opting for smart meters as compared to manual meters. So the opportunity for growth is very significant. I would believe that the stock could be accumulated on some market declines, because the next couple of years order book is very strong, visibility is very strong. So I think in that aspect, Genus Power should do very well for FY24. But I think an ideal price would be to buy on correction. The stock has risen significantly, so that would possibly give a better alpha and a better ROI to the investor.